Good evening, everybody. Welcome to the Locke in Your Success Trade and Market Update for January 6th, 2013. This is Saturday night the 5th. I'm recording this a little bit early because I'm heading out to SMB training in New York City to tape the Rock trading system, which I'm extremely excited about. We're also going to be doing Options Tribe with Seth Frudberg and Tom Hughes. Tom's going to be at his home, but Seth and I are going to be together in New York, so we'll be commentating that meeting together. Tom is someone who's been trading his own version of the M3 trading system, and he's using the One software to monitor the trades, which can be quite challenging because that system in particular throws your delta all over the place. It's hard to get accurate readings. So it'll be interesting to see how he's doing, and that should be a lot of fun as well. Let's take a look at the markets here. Back last week when the markets were down here at the 830 level, about 50 points ago, I had this very aggressive target at 870 to the upside, and I had people heckling me saying there's no way that's going to happen this expiration month, and we're starting to think they might be right? Because we're getting some pretty good weakness here. Volatility was really climbing in the markets, and next thing you know, the Russell blasts off like a rocket. This is a very, very aggressive move, and it blew right past the area where I thought the highs were going to be. So here we are. We're up here at we touched 880 on Friday, which is a huge move. All-time highs on Wednesday, Thursday, and Friday in the Russell, and this is all-time even before the market crash. If we go back pre-2008, the Russell has never been this high, so that's quite incredible, quite incredible. The question is, where do we go from here? Well, we don't have any overhead resistance here. However, we do usually act in unison with some of the other indices. So if we take a look at the SPX, we're coming up into the post-2008 highs. The SPX itself is not near or not that close to its all-time highs. Its all-time highs up here at 1576. So we would have over 100 points to go to hit that. I would not think that we're heading that high anytime soon. Maybe a little later in the year, but not right now. If anything, if we break this level, we may be pushing up into the 1510 area. We'll have to wait and see. I wouldn't be surprised, or this is very bullish, but I would still be fairly certain that this level here is probably going to hold. And if that does, that means the rut pushes up for another couple days, maybe another 5 or 10 points or something, and then reverses down. We'll have to see how that has. The Russell may also flatline to the side while this continues to climb into its resistance area, and from there probably pull back. The Dow, this is very, very bullish. We just broke out from an inverted head and shoulders, so I wouldn't be expecting any kind of big pullback here. If anything, back to the trend line. NASDAQ, its breakout also was very bullish. It had a box range that we were in, and we broke the box range. Normally, we're going to retest the top of this range, which it's not far from now, before we continue higher, probably up into this area. My guess is we set a new box range in a NASDAQ here. Dow is going to continue higher up into 13.6. Probably not next week, but longer term. And this here is probably going to range out in this area and then continue higher up to the 1510. Russell is likely to stall out here, probably reset and close the month back where I think it's going to close the month. From there, more than likely it's going to continue higher after reversing somewhere between the top of this candle here and this trend line here at 850, 855. That is my prediction for the markets. We shall see how that goes. Of course, news can change everything, and if SPX just decides to plow through this area, that would be absolutely incredible, actually. And that would mean a continuation up for the Russell without any real pullback, putting us in a real dangerous situation for a fairly significant pull down. Alright, let's take a look at our positions. Let's go to the January bearish butterfly first. Yes, I am still in the bearish butterfly. This thing has gotten the you-know-what kicked out of it with this very harsh up move in a bearish trade. On Friday, I think I posted all the moves I made to this on Friday. I actually rolled 5 more of my 830 butterflies all the way up to 890. The position currently looks like this. I am more or less playing for a small loss this month. We'll see if we can get most of this money back so we can carry it on. If the market chills out, we could probably do that. If the market creeps up, I could probably do that. I can continue to bring things into the 890 area. If the market holds anywhere in this range, we should be good and make most of our money back. I may even be able to prop this up late in the trade and actually make something here. Not counting on it, but it would be nice. If the market decides it wants to just run up another 10 points a day, then I don't know if we probably won't be able to keep up with that and end up max lossing out. And of course, if we crash, we'll max loss out. But that is our January position on the bearish butterfly. The M3 has been feeling its share of pain this month as well. We are still down 881. I've been down money, I think, since the day I entered this darn thing. I just had a really bad entry. We entered, and then immediately, within a couple days, the butterfly prices began to crush out of the trade, which happens occasionally. I had a butterfly we bought for like $16.85, just crushed right down to $13. So that happens, and sometimes it's hard to get back. So, especially with the type of price movement we had. So to be down less than 2% or even 2% on a month like this, I am extremely happy with that. Right now, our current trade looks like this. Should we continue up, my plan is, especially it would be nice if we get a nice shot up, my plan would be just to close this out at a small loss and run into February. If the market backs down, then assuming we don't have to do any more adjustments, if it does it relatively quickly, and it doesn't have to back down that far, get another 10 points or so, be able to close out at a small profit. I'm good to go with that. If it kind of hangs here, I'll probably stick in a couple more verticals, see if I can control my Greeks a little bit more out here, give it some more time to come back. Doesn't come back, then I am simply going to end up closing this out and going to February. But happy with the performance considering the markets. And of course, our bearish butterfly for February up to date. During the week, we did sell out of our 830 put butterflies, rolled up to 850 and added an 870 per guidelines. I did hang in the 830 a little longer than I was supposed to. I did that because I've just been too busy to deal with this trade, and it really wasn't any trouble. So far, we're down about 1/3 of our max loss, which is, I think, very reasonable for the type of market run we've had in a bearish strategy. I do really, really like this position. If I was able to, I would love to be able to enter this today at 870. The chances of the market outrunning you if you're in here at 870 would be pretty low. Even here, it's very unlikely it's going to outrun us. I think it's possible from here, but I don't think it's likely. So here is what the current position looks like. If we get any kind of stall or pullback, then it would be really nice. We do have a delta theta roll that's scheduled. If we get a move significantly over 880, we would be looking at rolling this 850 butterfly up to 890. Didn't think I'd be saying I'd be buying an 890 butterfly this month. All the way up to 890, and from there we would add in a 910, which would be quite an achievement for the markets. We'll see if that comes to play or not. I'm thinking more, I'd rather kind of wait here until we prove we're going to go higher, and that proof to me would be the SPX breaks out over that resistance level we were talking about. If that happens, then I'm definitely interested in doing this delta theta roll and then pushing higher from there. So that's our February bearish butterfly. I showed our January bearish butterfly and our M3 for January. I have not entered the February M3 yet. I am very excited to do so. I'm almost to the point where I'm considering closing in January because I think the opportunity is so good in February right now. I'm kind of, if that account had the capital, I would be in the February. It just simply doesn't. So if you got the funds freed up, I think they're really good trades this month. Of course, I can't guarantee anything, but the probabilities look really nice. And that's it for this week. Make sure you tune into the Options Tribe Tuesday night. That should be a fun time, and I will keep you updated with any changes. And I hope you have an awesome week. Good night, everybody.